Hello, I'm your host, Effie Pilarino, and I'm excited today because I'm going to take you on a wonderful journey, and everybody has to listen today. Those that believe in what Rubini and Taleb are claiming, and those that are big fans of Antonopoulos and Boutoria, everybody in between, and at these two extremes needs to listen to us. And we are going to try and offer you a more objective view of what is going on in the world in this part of the innovation space. And I'd like to welcome on this note Professor Alexander Lipton. Welcome, Alexander.
Thank you, Effie. It's a pleasure of mine.
For our audience, let me say a bit about the many things that you're involved in. From an academic perspective, you're a professor at the Hebrew University. You're also involved at MIT with the innovative MIT Connection Fellow program that hopefully you can tell us more about it. And you are the co-founder of Sila Money, and you're an advisor to many other blockchain projects like Zilliqa, Clearmatics, and so on. And we have lots to talk about. You are co-author of two upcoming books. One, I believe, is hitting the market just as we speak at month end, and the other is due in October. So we're delighted. People that wear many hats are delightful because they see the world as it is, which is it's gray, it's colorful, it's like a rainbow. So Alexander, I love a lot of your writings because you reference Greek history and you make analogies when you speak about Bitcoin and Aphrodite and all sorts of other analogies. You also connect history, the history of money. I was reading one of your recent writings and you spoke about what you call the object-based money versus the record-based money. So where would you like to start? You know, you have a quantitative finance background. We have similar paths in that sense. And I grew up with a generation that was focused on econometrics and Monte Carlo simulations, and I used chaos theory in my thesis. But where are we today? What innovation are you seeing there?
Well, Effie, first of all, thank you very much for having me. Your program is deservingly well known around the world for being a delight to listen. So I hope this event would be also pleasant for our listeners. So, well, the main innovations right now, it seems to me, are happening in the monetary sphere in the way of defining new type of money, if you wish, right? So that's on the one side. The other very big development, which is still in its, I wouldn't say necessarily infancy, but it's still early stages of its development, is transition from analog version of money to digital version of money in the form of either cryptocurrencies directly or central bank digital coins, which is a very major topic, or in the form of stable coins. That's where I see major development in this more rails level, so to speak. And then in more quantitative finance, asset management area, so to speak, I would say that applications of machine learning and artificial intelligence certainly are making important strides, so to speak. To my disappointment, I have to say that quantitative finance per se, option pricing, nature, will start developing actively, are, I don't think, currently the very central part of the overall quantitative finance development. But this might change. But for the time being, I would say emergence of the new monetary paradigm on the one hand, and the ability to absorb and process enormous amounts of data is the other big development.
So in the book, your first, the one that's coming up first in the end of July, that is titled Blockchain and Distributed Ledgers, Mathematics, Technology, and Economics. What is really the mission there? What is the message, and what are you covering in this book?
Okay. Well, that's, first of all, I wrote it together with a colleague of mine, Adrien Treccani, who is the CEO of Metaco, a well-known Swiss cryptocurrency security firm based in Lausanne. So what we wanted to do is to present an unbiased and unvarnished description of the landscape, the way we see it, as well as equip the reader with tools which will allow her or him to actually understand how things operate, and potentially with a little additional effort be able to contribute to the development of the field. So in other words, both of us were extremely irritated by all kind of papers entitled everything you need to know about cryptocurrency without all this cryptographic nonsense, or let's throw away mathematics, which is anyway incomprehensible and unnecessary, and go to the jugular. That's exactly what we didn't want to do. So we provide an objective, well, what we think is an objective view, and tools to contribute, to understand and to contribute. At the same time, I would not necessarily say that the book requires enormous mathematical sophistication. We develop everything from the ground up, and by the end of the book, people should really become well-versed, intelligent citizens of this and participants in this major project. That's the objective, if you wish.
I mean, yesterday I had a conversation on LinkedIn around the usual articles that have become a daily occurrence these days about China, the digital yuan, and all these, geopolitical controversies. And I was saying that it's clear that all students of international relations should be well versed in these future technologies, because you have to understand them. They're shaping up the new world that we are living in. So even if you are coming from that angle of the international relations, you have to understand blockchain.
Very true. I could not help but agree with you entirely. And in fact, it's interesting enough, I was also having a conversation with a very well-known journalist on that very topic, the geopolitical implication of stable coins and developments in China and things of that nature. So these developments cannot be underestimated, because I'm sorry, cannot be overestimated. I'm sorry, I'm making the same mistake as one of our presidents, right? So no, they cannot be overestimated. So in a sense that one of the major tools in the US quiver is essentially control of SWIFT, or at least the ability to influence its operation on a very large scale, and as such, impose sanctions and things like that. If the Chinese yuan becomes a viable currency which can operate outside of Chinese borders, then it is impossible to envision a new world where trade in some areas of the world will be done, outside of U.S. control, not in the U.S. dollars, but in Chinese yuan, or it is possible that some new types of payment like digital trade coins, something which we have been very interested in at MIT, things like that can become dominant for at least, for a certain trade relationship. And then, of course, the geopolitics will change quite dramatically.
Change. What are the digital train coins concept that you refer to and that you're thinking at MIT? Are these can we imagine them as settlement coins like the JP Morgan coin, or how do you differentiate
It
them?
is well, it's an excellent question. So for several years now, we have been advocating, coins which are backed by real assets, and we had and continue to have, several objectives. One, to help smaller trading nations to somehow present their goods and be part of the international exchange on a more equal footing, and the other more general, to sort of find a counterbalance for inflation and what we view somewhat arbitrarily moves by central banks. One of my peeve ideas is that we are observing a strange evolution of banking, with central banks becoming more and more fractional reserve banks in the operation, whilst the commercial banks, volens nolens, becoming more and more narrow banks. So it's, in a sense, what we see is a somewhat weak demands for loans, or at least, from those parties who possess collateral, which is a very important bit of the equation. And then central banks stepping into the breach and starting to acquire assets right, left, and center, which can be proven by just looking at the explosive growth of asset and balance sheet of the Fed since before the global financial crisis of 2008, 2009, right? So it's one side of that. The other side is the excessive growth of reserves, which are non-mandatory reserves, which also grew up a lot, by trillions of dollars. And all this is moving the entire financial system in a certain, in my mind, less than desirable path. I am very afraid of inflation, to be perfectly honest, and we can see here in the United States inflation raging unabated, and that's why we were thinking that reviving, using this new blockchain technology, reviving this old British economist ideas of tabular currencies and things like that, like going back to to the 19th century, to John Maynard Keynes, and the 20th century to Caldor, all these things together. We thought that blockchain gives them a new lease of life, and trying something like that might be very, very beneficial. So we wrote about it, several papers, some popular, some technical. So one of our earliest exploits in this direction was the cover article in Scientific American, of all places. They had a special issue in 2018 called The Future of Money. So that was our contribution. But as you mentioned, there are two books which we're talking about. So the second book is essentially dedicated to this. It's called Building the New Economy, and Data as Capital, and that's Sandy Pentland, Thomas Hardjono, and I wrote, and these are kind of ideas we have.
So the second book, the Data as Capital in Building the New Economy, and of course, I can only imagine that the banking system is a small part of all this, and it would be very narrow if you only looked at the financial system for this purpose. How does this book differ from the one that's coming out in July? Is it mathematically focused? Does it take an economic angle?
it takes a holistic approach to, as you say, it does. The first book by and large is directed toward the financial system, toward the mathematics of, um, you know, cryptocurrencies, towards the applications. So we wrote a couple of chapters about applications, including central bank digital currencies, including applications of blockchain in supply chain management and many other things. The second book was MIT is more holistic and more broad. It covers all kind of applications and all kind of aspects of blockchain. So as the name suggests, the privacy of data, the usage of data in encrypted form, an attempt to build a more meaningful world system as a whole, so to speak, right? So at MIT, people are supposed to think about things like that, not what's going to happen in the 21st century, but what's going to happen in the 22nd century, so to speak. But anyway, so no, it's closer to home, right? So it's more like a blueprint for the next 20 years or so. And there are several additional contributors to the book, and so they present all kind of views on data usage, how to avoid being subsumed into this social media maelstrom, which none of us likes, and things which can change our life not only at the financial level but at the philosophical level, if you wish.
So I imagine that the big ideas around decentralization and degree of decentralization in the way we organize as an economy, in the broad sense, not in the narrow financial sense.
Precisely, that's exactly right.
That is excellent, and I cannot not dive a bit into your paper that goes hand in hand with Taleb's paper in the Quantitative Journal of Finance. For our audience that doesn't know, Nassim Taleb put out a paper titled Bitcoin Currencies and Fragility, and it presents, I think, three main points, bashing, if you want, especially Bitcoin. From what I understand, your paper, Alexander, and I read it, is really as human as it can get, trying to be objective, to present the pros and cons of what exists and where we are at in this tech development, because of course that can change. So do you want to talk
very
about
kind. Yeah, absolutely. Absolutely. You're very kind. I mean, like I know Nassim for a very long time. I mean, he's a, very original thinker and all that. Objective, probably he is not quite, right? So he prefers a partisan approach to things, which is, perfectly legitimate. But I like to look at it in a way which I think, and you kindly mentioned as well, is objective, right? So, well, as objective as I can possibly be, right? So it does not mean that it is not biased. It might very well be biased, but what I think is going on is that the main role of Satoshi Nakamoto, whoever he, she, or them might be, was akin to the transformative role of reformers of the church, like Luther, Calvin, and others. In essence, until Nakamoto came to the scene, people and their money were separated by bankers, in the sense that other than exchanging cash, you and I would not be able to engage in any financial transaction without the help of a banker. So the same way as before the Reformation in the Catholic Church, the Bible was written in Latin, and so people were essentially not able to communicate with God directly by through the offices of a priest, right? So because vast majority of the people, well, majority of the people was illiterate to start with, but then those who were literate in general were writing in vernacular, and so Latin was not really readily available. That's, by the way, it's not the case in the Orthodox Church, right, where people can read the holy books directly, or in Judaism as well. But in Catholic Church, it was like that. And so, but this is just an historical analogy, nothing more than that. But what it is that Nakamoto, in principle, envisioned a system where there is a possibility of direct exchange of value, right? So that was really a revolutionary step. Whether or not the actual system which he designed, or whatever, what they designed is a good one, it's anybody's guess, right? So it has a variety of advantages, but it has many disadvantages. In my mind, one of the biggest is that it is not directly related to the real economy, and hence Bitcoin per se, I would say, at the risk of causing people to attack me, but in my mind, Bitcoin doesn't have any value per se, but it does not mean that its price is zero. As the way I see it is, the fact that it doesn't have any value implies that it can have any price, right? So it's a different consequence of this thing. So Taleb thinks that it has no value, and hence the value is zero. That's not correct, because in my mind, because the variation of price can be quite wide, and I would say that that's one aspect. So this high volatility is preventing it from being used directly.
He's basing it on the argument that something that doesn't have earnings, dividends, or whatever should have that. But that to me is too basic.
I think so too. I think it's not a deep enough argument, and we have many assets which are like that, including gold, and for that matter, why do we need to go far? Amazon stock doesn't pay any dividend, right? So it's basically probably should be characterized in the same vein, right? But it seems like the majority owner of the stock is happily riding this wave, and in fact is right now in space, if I understand correctly, or maybe has landed already. So it seems to be working quite well without dividend for some people.
But
so,
Alexander, what about Taleb's argument about when the miners finish their job, so to speak, right?
And that is a much more relevant argument, and in fact, I make a very same argument in my paper. So what I wrote is that my first impression when I read the Nakamoto's white paper was that it's akin to the Schlieffen Plan, which was the German general's concoction of how Germany can win a two-front war. It was prepared before the First World War. German generals seem to be kind of having a penchant for this type of activity, times and again they come up with all these plans. Some of them work, thankfully most of them don't. So this one didn't work in the sense that there was not enough attention to detail, right? So he basically assumed that there would be enough force to circumvent Paris from the right flank and all the type of thing, but he knew full well that even with all the reserves called by and creating the secondary divisions out of reserve troops, it would still be not enough troops. And so essentially he just stopped there and said somehow it will work, and it didn't. So the same problem is indeed with Nakamoto's plan. When the amount of rewards per block goes down, it's already like, as we know, 6.25, starting with 50, right? And eventually it would be whatever 3 1/8, etc., etc., etc. Then, of course, the maintenance of the integrity of the Bitcoin protocol would be a major issue. In this regard, he and I are completely in agreement. I'm worried about it. Well, worried, I'm not that worried, but because, different people have different worries in life, but, but it certainly is something to think about. Some people are really naive, I have to say. Some people argue that when this mining will stop, so will the consumption of energy. Nothing could be further from. So in reality, when mining, if the system continue to exist and the mining were to stop, then there would be tremendous transaction costs, which should compensate miners for the inability to get block rewards. And then, the competition for those crumbles would become really fierce. If you remember when Henry Kissinger, the former Secretary of State, was asked why academic fights are so vicious, he said that this is because the stakes are so low. And, I had the chance to be a full tenured professor at an American university, sitting on the hiring committee and so on. Yeah, I can confirm fights can be quite vicious, right? That's true. Anyway, so
let me add to that, because
right.
I actually went, after having my math degree, I went for a PhD in finance, and
Right.
all along I thought I was going to have an academic career, which I didn't. And one reason was that I saw these vicious fights, and I was like, I can't do this. And then, I went to Wall Street, and I saw some other things there. That
Yes,
is a whole other topic.
Yes, I had the chance to see vicious fights on Wall Street as well. I mean, my fair share. I mean, it seems to be part of the human, for the course of, competitive human endeavor, right? So be it academic, which is extremely competitive, be it Wall Street, which by definition is competitive. But anyway, so the end game, the end spiel is certainly not thought through, at least, not the way I can see from the white paper itself and so on and so forth. So in my mind, I would say this Bitcoin protocol, concentrated our minds on what is possible. Whether this itself would be the last word, I doubt it very much. So in my paper, I argue that in my mind, it's more akin to vinyl discs, which were kind of the initial way of recording human voice and all this, his master's voice and, all this thing, gramophones. And then it moved, from analog to digital to even more digital, et cetera, et cetera, et cetera. And so essentially, there are still people who enjoy having, vinyl collections, and it's a viable source of value but it's a niche undertaking. So from that perspective, I think that Bitcoin is super important, a product of a genius mind or minds, but I think it will be replaced by something else. What it might be, it's anybody's guess. Of course, Ethereum is promising in a sense that, okay, first of all, it solves this issue which Taleb is alluding to, because in principle, Ethereum can bring you, some dividends, especially if they move away from proof of work towards proof of stake. But of course, if they were to do this, it would be less revolutionary, right? So it would be just, the same as an ordinary, public company where, say, Warren Buffett has, certain say, and an ordinary shareholder has a very little say, et cetera, et cetera. I can confirm this because there are a couple of companies where he and I both have holdings, but somehow kind of nobody comes to me to ask what I think needs to be done, right? So, but at least they can basically generate some income out of Ethereum and that sort of thing. So having said that, at the moment, the way Ethereum is, it's a self-defeating protocol, because the more expensive Ethereum becomes, the least suitable it is for actually serving its stated purpose as I view Ethereum as a consensus, as a server provider, and we dedicate a lot of time to that in our book with Treccani. And but as I said, it's kind of contradictions are built inside the protocol. Even the simple transfer of value from one address to the other in Ethereum can cost you like hundreds of dollars, and I'm not even talking about complicated smart contracts which can cost you a great deal of money. And then if you make a mistake of allocating insufficient gas to the project, then it would go back to square one, but gas would be all burned. And I anecdotally know people who spend literally thousands of dollars on unsuccessful Ethereum transactions. Yeah. So I mean, it's still not a perfect protocol, even though, of course, it's given the first prize for sheer ambition, so to speak. But at the same time, as for marketing chutzpah, because like when I was a coder, I would write a subroutine. If I write something in Ethereum, it would be a smart contract. So compare the two, right? So whom do you want to be, a writer of subroutines or a writer of smart contracts, right? So that sort of thing. Or the fact that this is a Ethereum virtual distributed computer and so on and so forth. I used to do really heavy lifting calculations for the US government when I was a consultant at Los Alamos. Whatever it was, I don't remember. It doesn't really matter. But I can tell you that what Ethereum thinks is a world computer is not, right? So I mean, it's compare.
Alexander, I would like to wrap up our amazing conversation and bring it back to the title of your second book with your co-authors that will be out in October, where you talk about the new economy and you focus on data. And simply say that, no matter what happens to Bitcoin protocol and the Ethereum protocol and all the protocols that we know today, that will evolve probably most mathematically, they will. Can we say that we should acknowledge the role of Bitcoin protocol in shaping up this new economy that is really data-centric, and that it will go down in history as a huge success, if you want, because it opened up a lot of potential? Do you agree?
Completely. Whether or not Bitcoin itself stays or goes and all that type of thing, the sheer audacity of vision, successful vision, right, is just staggering, and it directed us towards a new system. Whether this system really is working at the moment, probably not, because the other thing which is important to understand about Bitcoin protocol, even though originally it was designed for you and I to exchange value in kind of direct fashion, vast majority of Bitcoin users have to go through the likes through exchanges like Coinbase and so on, so which defies the purpose. So I'm sure that something else will emerge, but it is certainly a very important direction: digitization of the entire economy, now casting ability to steer it in the right direction. Emergence of stable coins, emergence of central bank digital currencies. Like in the next 20-30 years, we will see the world change in this regard beyond recognition.
Alexander, on that note, thank you so much. We will share with our listeners all the references that we mentioned. And again, it was a pleasure speaking with you.
Thank you, Effie. Goodbye. It was a pleasure on my side as well. Goodbye.